Mimi, what's your take on these market levels? Some high-profile risks out there, like inflation, as we saw this morning with the producer price data. Do you think that's priced in sufficiently?
Yeah, so we think that inflation will be a bit stickier. Having said that, the earnings season was once again very strong. We continue to see margins expansions. We are playing a bit more defensively on the equity side, given the valuations that we're at now, and some potential risks for possibly tech regulation or some inflation, as you mentioned, some of the other longer-term plays. We've pulled back a little bit, but overall, the earnings season has been quite strong.
There's also this view out there, Lindsay, that with yields declining and the curve flattening, that maybe it is a look ahead to a Federal Reserve that might be closer to tightening and potentially slowing growth in that way. Is that part of the thesis?
Or it could be that inflation could normalize, right, in the next 6 months or so, because the stock market is a forward-looking mechanism. So that's the other option that the market can be looking at here, or the bond market could be looking at. So I think that we are seeing really, really early signs that inflation could potentially cool in the year ahead. Of course, it remains pretty hot in the current day and age. But as we look to next year, we're starting to see the Baltic Dry Index come down. You're starting to see the cost of containers come down. You're starting to see the number of days at port begin to ease. And so while there's still a long road to go on the supply side, I think we're moving in the right direction, at least when it comes to the inflationary story.